Hello, everyone. Um, Hope everyone's having a great day. Today, I want to let you know about a biotech that is pretty good, and it should be on your watch list. So it's called 10X Genomics, and the ticker is TXG. This company is trading right now at $45. It is at a 52-week low of $208. The 1 year target is $88, and the institutional ownership is 99%. Let's see. Let's read this from the street. Via the street. 10X Genomics is a lab hardware provider that helps customers better understand the complexity of biology. It sells instruments and the disposable products required to run them that enable scientists to visualize biology in resolution ranging from single cells to systems of millions of cells. The company the company's Chromium and Visium products have become integrated into drug development workflows worldwide. In fact, the business counts the in, in fact the business counts all the top 100 global research institutions and all the top 20 global biotech companies as customers. Impressive. What makes 10x Genomics a quality growth stock is its revenue mix. It may be known for selling lab instruments, but the primary source of revenue and profit actually is sales of the disposable reagents needed to operate them. Think of it like a printer and ink or razor and blade business model. This revenue category, called consumables, is what separates premium lab hardware businesses from the also rans. Take DNA sequencing leader Illumina as the perfect illustration. Investors may be most familiar with the sequencing instruments it sells to customers across the globe, but the business generated 81% of revenue from consumables in 2021. Illumina is basically a chemical supplier. Revenue mix is among the first metrics investors should consult when researching a lab hardware company. Most don't make the cut. Pacific Biosciences of California generates only 40% of revenue from consumables. It reported an operating loss of $210 million for 2021. NanoString Technologies generates 53% of revenue from consumables. It reported an operating loss of $108 million for 2021. I mean, now consider 10x Genomics, which generated 85% of revenue from consumables in 2021. It reported an operating loss of $52 million for last year, but the deficit stemmed primarily from continued investments in growth. The business generates almost as much revenue every quarter as PacBio or NanoString generates in a year. Investors will be reassured that 10x Genomics had a cash balance of $539 million at the end of March of 2022 and will burn less than $100 million this year. It likely could be profitable in the macro environment demanded hunkering down or continue investing in growth as competitors pull back. At its peak, the business was valued at nearly $20 billion and over 40 times sales, which was ridiculous. As a general reference, the best of the best lab hardware and medical device companies tend to max out at around 15 times sales, and even that should raise some eyebrows. The business is valued at roughly $5.5 billion and 9 times projected 2022 revenue, roughly 6 months into the biotech correction. The shares can always head lower, especially considering that the stock market could fall further in the next 12 to 24 months. But investors cannot be concerned about calling a bottom. Instead, investors should be concerned only about maintaining valuation discipline and investing in attractive opportunities. After multiple years of trading at a silly valuation, shares of 10x Genomics finally deserve a little more attention from investors with a long-term mindset. So, there it is. 10x Genomics, ticker T. What's the ticker again? Hold on. TXG. All right. So, just put that on your radar. Like the company. And I'll be back with more videos. So, have a great weekend, everybody. Great night and everything. All right.